Welcome to Cherry Street Investor Education with Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavitha Baratakke.
Hi, I'm Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Today, I want to talk to you about accredited investors versus sophisticated investors and what kind of investments, syndicated investments, these investors can participate in. So let's talk about who is an accredited investor. The Securities and Exchange Commission, called the SEC, defines an accredited investor as someone who has an earned income that exceeds $200,000 or $300,000 together with their spouse in each of the prior 2 years and reasonably expects to do the same for the current year. Or, this is an or, you have a net worth over $1 million, either alone or together with your spouse, excluding the value of the primary residence. This is important because let's say you live in a high state, like high property value state like California, you have $1 million home, but you don't have $1 million outside of that home in other investments, then you do not qualify as an accredited investor. But perhaps you qualify as an accredited investor based on your income rather than your net worth. That's possible. You can also be, you need not be an individual. You can be a trust, a bank, a partnership, or a nonprofit even, depending on the situation. With an LLC, generally, an LLC has to have assets worth over 5 million for you to be accredited. There is also an extension to this accredited status lately. So if you are, you hold a certain sort of security license called Series 65, and I believe Series 70 as well, then you can qualify as an accredited investor. So essentially if you think about why this is set up this way, is basically saying that if you want to invest into certain types of securities, then you want to have enough net worth so that you don't put all your money into one investment. So what the Security and Exchange Commission is doing is they're protecting investors from putting all their money into one investment, which might be risky from a diversification as well as investment standpoint. So let's assume all your life savings are $100,000 and you put it in one of these investments. Probably not the best thing for you. So we're really trying to protect you through all these rules. So this is accredited investor. So who is a sophisticated investor? So we do have investments for people who don't meet the accredited mark, and SEC defines these people as sophisticated investors. And what does that mean? So that means that you have enough knowledge and experience in matters pertaining to evaluating the risks and merits of an investment. So let's say you're a stock market investor. You haven't necessarily done real estate, but you do understand how to evaluate the risks and merits of an investment. You could be a sophisticated investor. If you have, let's say, owned a rental home and you have evaluated the risks and merits of owning it, you do obviously know real estate and you are capable of making a good judgment call, hopefully. There are no income requirements for sophisticated investors, although only certain types of investments are accessible to sophisticated investors. A company, let's say I set up an LLC to do an apartment investment, which is syndicated. I might only sell a certain number of shares of the company to limited sophisticated investors. So I can have unlimited accredited investor in a deal, which I don't want to have because I don't want to deal with so many investors, right? So obviously I want to have as few investors and as much dollar amount from each investor as possible. But given the constraints of minimum investments, so I can have unlimited accredited investors, but only up to 35 sophisticated investors in what we call a 506B investment. So I'll talk a little bit about B versus C investment and where these types of investors fit in as well. So we expect you to be reasonably educated in investments or similar in that particular investment or similar investments. So let's talk a little bit about what securities are and what kind of investments that you'll typically see in the syndication world. Securities are tradable financial instruments that are used to raise capital in public and private markets. We have equities, which provide ownership rights to you. So if I, let's say, do an apartment investment, I mostly have an equity investment, and you can participate as an equity investor in buying that apartment building or that investment, whatever kind of investment it is. Then we have debt. So you're essentially the lender in the transaction, and you get a certain repayment schedule, and you get the money returns on your investment. Then we have hybrids, which combine some aspects of debt and equity. So preferred equity model is a good example here, where you're still an equity investor, but you're treated somewhat like a debt investor because you get a fixed rate of return and you don't participate in the upside of the property. So that can be sort of what I would call a hybrid. Every offer and sale of security must be registered with the SEC, or it must meet an exemption. So Reg D offering is usually what we use for exemptions with when we do apartment investments and all of these syndicated investments. So we use it to give you access to, like small companies like us, we give you access to invest with us. And we don't have to follow the normal SEC registration process, but we have to file what's called a Form D exemption. So that's how we do these syndications, 6B versus C, and what type of investors are allowed in each kind of investment. So the Reg D 506B syndication is open. The 506B syndications are open to both accredited and sophisticated, but with 35 sophisticated investors in each investment. The C investments is open to everyone, or is open only to accredited investors, I'm sorry, but it's open on the public in a public forum. So when it comes to investor relations and deal marketing, I will need to have a substantive relationship with each investor that I get into a 506B syndication. What is a substantive relationship? A substantive relationship is that we have met each other either on a Zoom call or we talk to each other, and I understand what you understand and what you have in terms of investments, what you've done before, and I can evaluate if you understand the risks and merits of investing with me or someone like me. So any sponsor and investor should have that substantive relationship in a 506B syndication. It cannot be promoted on social media or another public platform because it requires that substantive relationship between the sponsor and the investor. Whereas in a 506C in syndication, it's restricted only to accredited investors, but it can be freely promoted. So you can solicit for investors on Facebook or LinkedIn or any social media platform, public platform, get ads out and so on and so forth. We see 506C usually used by crowdfunding platforms, but that's not exclusive. Crowdfunding platforms also have 506A and other I'm not a legal lawyer by any means, but crowdfunding platforms have access to other types of investments as well. From an accreditation verification standpoint, let's say you come into a Reg D 506B offering and tell me that you are accredited. We call that a self-accreditation. So I believe that you have to believe that you're accredited, but I don't need to verify it. So the reason that matters is I need to know if you're accredited because I can only allow 35 sophisticated investors. So I need to separate out my investor pool. In the 506C syndication, we have to do what's called a third-party accreditation process. So we can send you to a website like verifyinvestor.com. They will actually ask for your information. Maybe it might be tax returns or income statements, and they will verify your accreditation for us. Or you can go to your CPA, attorney, or financial professional and verify and send us a formal letter of accreditation, because that's what we are required to have per SEC regulations. With that, I'm going to stop the share, and I hope that you understand these differences between 506B and 506C syndication, as well as who is an accredited investor and who is a sophisticated investor. If you'd like to learn more and want to learn how to invest passively in these syndications, please contact me. My information is in the following few slides, cherrystreetinvestments.com. Please set up a call with me for a complimentary consult. Thank you for watching, and I hope this was useful. Hi, I'm Kavitha Baratakke. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.